Can you see a blank screen? Aditya?
Yes, sir.
Sir.
So, Aditya told that a company can know its financial health from the PL account, profit and loss account, balance sheet, and cash flow. So, doing well, how do we define? Let us see. Company doing well. What does it mean? Aditya Agarwal. Aditya, absent. Aishwarya is Sita.
Yes, sir, present, sir.
What is the meaning of doing well?
So if the company is financially stable and making profits, that means the company.
You see, I don't understand this financial stable. What you tell me? What is this financial stable means?
Means
What is the meaning of financial stable? Come on, tell. Common sense. Nothing financial.
Recording in progress.
so like financially stable mean if the all accounts are handled properly, if the company is making profits and going the revenues are managed properly, then
So books of accounts properly prepared means the company is doing well. A loss-making company cannot prepare its financial statement properly.
financially stable, sir. So like if they have a good track of the whole financial system, then
Tell me, what is that track? Tell me. Come down to details. What is one financially stable company? What does it mean? You told company is making profit. So profit is required for what? Okay, fine. Aishwarya told. Aliva,
yes, sir.
tell.
Yes, sir.
What does it tell?
Sir, if we make our shareholders happy, then we can say that the company is health, financial
Okay.
happy.
Shareholders are happy. If equity holders are happy, you tell them the company is doing well. Okay, fine. But overall, on company perspective, how we can define the company is doing well? What does it mean? Alok Ranjan Bhuya. You see, I don't know whether you have studied it or not. Company needs profit for two reasons. One is for sustenance. What is the meaning of sustenance? You have got enough money to pay off your creditors, to manage the day-to-day expenses of the company, to manage the manufacturing process. That is sustenance. And growth. What is growth? Current year turnover is 1,000 crores. Next year you are making 2,000 crores. So that is growth. So the purpose of profit is you will have to first attend the sustenance and then you will have to think of growth. The two reasons you need the profit. Then from where you can know the profit of a company? So as somebody told, it is from PL account. So remember, it is not PL account, it is statement of profit and loss. Why I am telling statement of profit and loss? Anybody can say? Because this term is defined by
Because sir, the statement of profit and loss actually shows the profit and losses that the company is bearing.
That's true, but what I'm asking you, why you cannot tell it income statement? Why we should tell statement of profit and loss? The Indian.
Sir, income may be various, sir. Profit is a part of income. Income may be from different sources also, sir.
No. It is a legal thing. The Indian Companies Act 2013, Schedule 3. he describes this statement as total. Otherwise, you see profit and loss, income statement, interchangeably use those words. In US economy, people use the word income statement. But in our accounting system, we use statement of profit and loss. So you prepare the statement of profit and loss, and then you prepare the balance sheet. Okay. But should we keep on allowing students up to 15 minutes, 10 minutes after the class? Then I will do one thing. You cannot be disturbed in between. I will do it in Google Classroom, and there your recording facility is not available. If you are happy, I will do like that. Is it fine with everybody?
No,
So
sir.
next class onwards, I will do it in Google Classroom. I should not be Google Meet. Sorry, Google Meet I will use, and there recording is not available. Only will have to be happy with whatever I am doing. This sheet, Excel sheet, I will share with you. Okay, fine. No, that is not the solution, because you see, if I disable, anybody can enter the classroom. I think you know it. In Google Meet, it doesn't allow. Okay, so fine. Next class we will be doing in Google Meet. Because in between, I keep on allowing students come in, come out, disconnected. In Google Meet, you don't have any problem. Whomsoever I have sent the address, they are only allowed, and anytime they can enter, anytime they can go out. I don't have any problem. Okay, fine. So, Indian Companies Act, the Indian Companies Act 2013, it defines. You see how many times I am repeating the same thing, because in between people are entering and people are going out. So the Indian Companies Act 2013, as per Schedule 3, you define the format of your statement of profit and loss and balance sheet. Okay. You see another student again entering, but I will keep on doing this thing, or I will teach you. And okay. Hello, Rajan Bhuya.
Yes, sir.
Hello. Yes. Tell Alok. Do you know what is the format of your statement of profit and loss? How do you do it? Alok.
Yes, sir. Yes.
Tell. Have you any idea?
Sure. Sir, what was the question?
I'm asking you, in what format we prepare the statement of profit and loss? You have studied accounting.
Yes, sir. Yes, sir.
Tell.
Sir, in profit loss statement, generally we include all the expenses, income, all those things.
Fine. You tell me one by one. I will write. No problem. First, you tell me in heading what I write. Statement of profit and loss. For the year ending. Say I am writing 31st March 2021. It will be written like this. Then what do you do? You first
Sorry,
put the revenue, correct? What is the first item in revenue? Quickly tell.
Sir, all the incomes, assets. Like,
No, don't. Assets in revenue. Oh,
so all the
after 3 semesters is telling in revenue.
the income, sir, we just
What are the income? Tell me the nomenclature. What is the term used? If you don't know, no problem. Don't worry.
I don't know.
Tell. What will I write first? I'll write. Anybody can tell? Operating revenue, not income. Operating revenue. Then what I'll write?
Property.
Aniruddha Janna. Aniruddha is absent. Yes, Anirudh? Absent. Aditra?
Yes, sir. Then we write the operating expenses, that is cost of sales.
No, nice.
So,
You don't know. You don't know the format. No.
so wait, sir. General and administrative expenses, all those are
No.
the revenue, sir.
You should know it. Either you know it or you don't know it. Not like that. Yes, something good, correct. Non-operating revenue. Then what you write? Anybody can tell quickly. What is the next item?
Other income.
Other incomes.
Okay.
Interest.
Who is telling interest? Is interest an income?
It's a total income.
Is interest an income?
Sometimes it's income and sometimes it's expenses.
When sometimes.
See, sir, if the interest we are receiving it's an income, if we are
So
paying
you have already
it's an
covered in
expense.
other income. You see, you have already covered in other income. Interest received, dividend received, all those things will be covered under profit from the sale of fixed assets. Everything will be covered under other income. Then non-operating. Okay, then I'll ask you one question. Anybody can distinguish between what is operating revenue and non-operating revenue and give an example? What income? Bhaskar, come down to details. Suppose I say I want to write the operating income of operating revenue of a bank. What I'll write here? What will be the term? What will be the term?
Sir, repayment of the loan.
Sir, interest received.
Okay. So she told partially correctly. You will write here interest income. Because for the bank, interest is the income. So interest income will be operating revenue per bank. Tell another example. How to tell operating revenue? Okay. Reliance Industries.
Sir, commission received.
One minute. Reliance Industries. It is selling petroleum products. So petroleum products, the sale of petroleum products is your operating revenue. And who told commission received? For which company? You tell me, name the company back because company wise it will be different.
So,
Who told?
any company.
Alivatel.
Yes, sir. I told commission received.
For which company?
Sir, any oil company.
Oil company. Commission received. Where I will put? I will put in other income or non-operating income.
Sir, other income.
I will put in other fine. That's fine. But I am asking you operating revenue. What is operating revenue? So operating revenue primarily.
Sir, cash collected from customer.
Sir, revenue operating
Okay,
revenue.
one by one. Somebody told cash. Listen, one by one. Whoever I'll answer something or a question. Who told cash collected from customers?
Yes, sir. Cash collected from customer.
Gautami. Gautami, now you see,
Yes, sir.
I have collected money from the customers.
Yes, sir.
Customers outstanding amount, where it will appear?
Sir, in operating.
Okay.
Sir, in operating.
It will appear in the asset side. You write cash payment trade receivable. The term used is trade receivable. It means that cash to be collected from customers. Now suppose you already know the double entry booking system. You have collected cash from customers. So which account will be affected? Two accounts will be affected. Gautami,
Yes, sir.
which two accounts will be affected?
Sir, cash and sales.
Cash and sales.
So cash collected.
You told cash and receivable.
Sorry.
So your trade receivable is affected, cash is affected. So how do you say it is an income? This account is not affected. Getting? Suppose you are telling you are selling goods and receiving cash. So sales is operating revenue, it is affected once here. Cash will be affected here. So that we have already told. Interest income for banks, for Reliance Industries, petroleum products, whatever you sell, and you receive the cash, you write the sales amount here. Could you get it? Okay. Could you get it or not, Gautami?
Yes, sir. Get it.
Okay. Any other, somebody was suggesting some other big items?
So, service charges in telecom sector.
Okay, good. Service charges in telecom only operating revenue, 100% correct. Who else? Okay, fine. Anybody can tell what is non-operating revenue?
Dividend in
Okay. So remember, selling
Sir,
the
if you,
asset
sir,
one
sir, if
by
a com-
one. No, not like that. Somebody has told, let me clarify, then we'll go to the next one. He told Reliance Industries has sold some asset. So in asset, it will be appearing in non-current asset here. True or not? Who was telling? Bhaskar. So it is appearing in non-current asset. You sold the asset will go down. What you will receive? You will receive cash or bank. So cash will be affected. Or bank will go up. Cash will. Then tell me how it is affecting. Only thing is that from these asset sale, whatever is the profit that will be coming under here in this statement. Because that is an income. Your asset what you are holding in balance sheet, you straight away sell it, that money you cannot sell, it is my income. You getting me? Bhaskar, respond quickly, I will proceed. Okay. So, could you get it? So, the profit that I am getting from sale of assets, so is that profit on sale of asset. That is your, either you will put operating, non-operating revenue or other income. Where it is more preferable to put it? It is preferable to put it in other income, other income, profit on sale of asset, dividend received, okay, and interest received. All those incomes are other income. Okay? Are you getting me or not?
Yes, sir.
Then what is non-operating revenue? I should not teach all those things to you because you people are not able to tell me that I am telling. And again, after few days, you will tell, sir, I have not taught us anything. We are great creators who always take your claims. You don't understand, then finally we tell we could not understand anything. We taught just like this. These things you should have known by this time. 3 semesters you have covered. Okay. What is non-operating revenue? Who can say?
So which are not included from the core business of the company.
Very good. Give an example. Who is speaking?
Sir,
1 minute. Who is speaking?
sir, Arpan Mohanty.
Arpan. You are correct. But give me an example.
Sir, so the extra the products those the company sell beyond the
Give a specific example. Arpan.
Yes, sir. Yes, sir.
Management science is application, practical knowledge, and visualization. You tell me. Sunit, tell me.
Sir, so for example, Tesla, the core product of Tesla is electric cars, but Tesla also sells solar panels. So solar panels, it's non-operating revenue.
No.
Sir,
You can
profit
tell.
on investments.
I told you already, again you are repeating the same thing. It is not good. If you repeat your mistakes and don't learn from the subject that we are teaching, then you don't get it. I told you profit on sale of asset. Investment is an asset. So profit you get from sale of investment is also a profit or other income, not in
Sir, for example, like big companies invest in small companies like startups, and they gain the profit from that side. So it can be also.
No. It is again, you see, again, you see, I'll let me one by one I will answer. Again, you see, when a small company gets its investment from a larger company, the smaller company can be a subsidiary company of the major company, which is holding company. So, holding company and subsidiary company. Subsidiary company is the smaller one, holding company is the bigger one. So, the income of subsidiary company is included in holding company. That means, suppose I'm giving an example, you will understand it better. Suppose Jayaprakash Associate is a company. JP Power is a subsidiary company of Jayaprakash Associate. Anything JP Power is selling in terms of power cell will be included in the operating revenue of Jayaprakash Associate as a operating revenue. Are you getting me? It is not like that. Okay, I am explaining you. Anybody will answer or I will explain? Okay, I am explaining. So you see, suppose, let me give one example. You have heard about a company called Thermax. Okay. Siemens name you have heard? Tell yes or no?
Yes, Siemens.
Yes, sir.
So what does it manufacture? It manufactures equipments. Suppose Siemens is supplying equipments to one company. Say a company, B company, C, they have supplied the equipments. And what happens? It has got a condition that besides supplying the equipment, they will also separately provide maintenance expenses, maintenance services, and say installation services, and for those things they will charge income, charge money. Then tell me, what income it will be? It will be non-operating revenue. Why non-operating revenue? I am telling you the differences and you can know it better. First of all, remember this operating revenue and non-operating revenue, those two things relates to the product you are producing. So what is the product here? For Siemens, the product is equipments. Then second is product which is directly related to the company or the major business of the company. That will be coming under operating revenue. Income which is coming from indirectly from the product, that will be non-operating revenue. So you sell the product, you get operating revenue. Maintenance expense, installation expenses, maintenance charges, installation charges, then your consultancy charges, all those income that you are getting besides this product, but only because you have got the product, then this is non-operating revenue. When something doesn't relate to the product, then you can tell it is other income. Are you clear about it? Quickly. Yes, I should not teach this thing, doesn't cover, it is not covered in my course syllabus, but I am wasting my time. I have very few classes also. Could you get it? So quickly somebody should summarize, then I will go to the next part quickly. Let me ask somebody. Arpan Narayan Bahidar. Arpan. Absent. Ashish Kumar Paikna.
Yes, sir.
Ashish, quickly tell. We'll go to the next part.
So here is the three things we count in a profit loss account. That the operating revenue, second is non-operating revenue, and other one other income. Sorry.
Ashish, I will suggest one thing. Whenever we are telling now, make it a habit. Instead of telling income statement, profit and loss account, we tell a statement of profit and loss. Okay, come. Tell.
So in operating revenue, we consider the Like the revenue from generated from the core activity of the company. For example, the interest in banking sector and the Reliance industry, petroleum production. These are the income which are generated. These are the operating revenue. And then second one is the non-operating revenue. Basically, the non-operating revenue. For example, the in the if we are talking about the telecom sector, there for Geo, they install their set-top box in household. So the installation process is a extra income. That the extra income as a account as a non-operating revenue. And then last one is the other income is like interest, dividend, and these are the thing. Interest and dividend is the other income the company is get from the equity or the any.
It doesn't relate to product.
Yes, sir.
It doesn't relate to us. Is very good. You have given a CP max. Correct. You have 100% covered. Good. Okay. Abhik.
Yes, sir. Good afternoon.
Abhik, now I will ask you. You tell me what is the balance sheet? What is the format of balance sheet? What is the balance sheet? What do you do?
So in the balance sheet first we have to, as per the Companies Act 2013, balance sheet first we have to write the first it's a vertical, it's in vertical shape. So first we have to write the asset, non-current asset.
What I write?
Non-current asset, sir.
Okay. Non-current asset. Okay.
Then we will come to current assets. Shall I give some examples of some non-current assets?
Sure.
Sir, the land, building, these are non-current assets, sir.
Okay. Okay, fine. Go ahead.
Then current assets, sir, which can be liquidated if required, as liquidated early if required, such as cash, debtors, those are current assets.
Okay.
Then we we'll go to the liability side, sir.
Yeah.
In the liability side, so there will be first non-current liability, then there will be current liability.
One. Liability side.
First there will be non-current liability, then there will be current liability.
So you have got liability side. Remember, we telling.
Suppose there will be non-current liability. Yes, sir.
Remember, deciding it equity and liabilities. Okay. So you will be having non-current liabilities. Alright, good.
If the debentures and long-term borrowings, those will come under this section, sir. Then there will be current liabilities.
Okay.
In that section, we will have the creditors and bank overdraft. Those are current liabilities. At the end of the balance sheet, both the sides should match, sir. And the asset side should be equal to the liability side, sir.
So your assets and liabilities should assets and liabilities. Assets and liabilities should match. Okay, fine. Good.
Thank you,
So
sir.
assets and liabilities should match. The asset thing. But before doing this thing, I think I have missed one thing. But the statement of profit and loss doesn't is not complete with the revenue. You have to add the expenses
Yes,
also.
sir, I missed one thing, sir.
No, you didn't miss.
The profit or loss should be adjusted in the the balance sheet, sir.
Abhik, you tell I'm a commerce student.
Yes, sir. Yes, sir.
Abhik should not get ski mark.
Sorry.
Abhik, you should not get a class participation mark.
Yes, sir. I should, sir.
Right? Because commerce students must know it.
No, sir. I should get, sir.
Right. You have to already balance it, but I mean the expense side also. Let me finish of the expense side. So you understood what is the revenue side? So revenue side is operating revenue, non-operating revenue, and
Yes, sir.
other income. Then we will write the expense side. If we write the
Yes,
expense
sir.
side. Now, so again, bear with me for this slow writing on the whiteboard because that is the beauty of your hassles of your online process. So you see, I write here revenue, input, operating revenue. Then we wrote non-operating revenue. Then we wrote other income. Those things together makes here total income. So we write here statement of profit and loss. Okay. Now expense side we are writing. We start with what? Anybody can tell?
Operating expenses.
Operating expense.
Bhaskar Kumar. What is the first item I will write in expense side? Expenses. Expenses. Now it is clear. You should have told me from the beginning. You see, this microphone is not near my face. I forgot altogether while teaching you. You should tell me. It is so mild. It must be. You must be listening to me. Okay, fine. So expenses side. Tell me. What I'll write first. No, don't tell in that way. You tell me the format if you know. Okay, fine. No problem. You don't know, that is not an issue. Chandita Mishra.
Yes, sir.
Tell.
Sir, first will come wages.
Wages.
Yes, sir.
No. Okay, I'm writing wages. You don't write wages. You write employee expenses. Then next is.
Then, sir, insurance.
Not like that. You should tell the format. Fine, Chandita. Anybody knows? Tell me. Otherwise, I'll tell you. Who is speaking?
Samit.
Sir, first there will be
One minute. Let it tell.
So in expenses side, first of all, we record all the operating expenses, all the day-to-day expenses.
No. Okay, fine. You see, here we are talking of something legal. That in standard format of your Schedule 3, Indian Companies Act 2013, how it is prescribed, that we are writing. Okay. So that's why you have got a specific format. So you write raw material consumed. Then you write here changes in stock of finished goods, work in progress, and stock in trade. Employee expenses, then manufacturing expenses. Many companies write it as other expenses. After a few use of this thing, suppose this total income is A. This is total of these things. This total is, suppose, is B. Then A minus B, you write it as EBITDA, earning before interest, tax, depreciation, and amortization. Okay. Then what you do? After EBITDA, you write depreciation and amortization. I think you know the difference between depreciation and amortization.
Yes, sir.
Ashish Paik, right? Tell me what it is.
Sir, amortization which is basically the depreciation of the intangible items, or tangible, that is the depreciation we use.
What is the meaning of depreciation?
Depreciation is the value reduced over the time.
Categorically, we should tell it is defined like this. Depreciation in the reduction in value of asset due to wear and tear, obsolescence, and passage of time. Okay. So that is depreciation. If you are talking of intangible asset, it is amortization.
There is amortization, yes.
Okay. So suppose this I put as EBITDA, I put as C. Then depreciation amortization I put as D. So C minus D, that is EBIT, earning before interest and tax. Remember, anybody, whoever pursuing career in management, this format should be there in your mind throughout your life. Don't tell that why after 1 year you should forget once you get the job. You cannot survive in the management world. You will have to remember this format of, because you see, unless you understand, people will be speaking this, using these terms very often. How do you know? What is EBIT? What is EBITDA? Okay. So EBIT. Suppose we put EBIT as E. Then you put finance expenses. So finance expenses are primarily the interest. So you see somebody, okay, fine. Then finance expenses here, it will be interest and bank charges, other expenses relating to your money. Suppose I put it as F. So E minus F is PBT, profit before tax. Then you put tax expenses. Okay. You remove tax expenses from PBT, you get PAT, profit after tax. Then you pay, what is this one? E minus AF is PBT. Suppose I put it as G. So tax expenses, suppose H. So PAT is G minus H. Then you put dividend expenses. Dividend expense means whatever you are paying to the shareholder in form of cash. Then you get, suppose this is I, this is J. So I minus J, that is transferred to reserve. Is it clear? Could you get it? Why you could not tell it? Sandita Mishra is gone. Chinmay Mohanty? Absent. Chinmay is absent. Devapam Malik?
Yes, sir.
Devapam, can you describe this thing? Seeing the screen, I am showing you everything. You explain me.
Sir, balance sheet, the total balance sheet.
No. We have not finished of the PL account. Statement of profit and loss account. We start with. Come on.
Sir, this is balance sheet, sir.
I am asking you, you explain me the statement of profit and loss.
Sorry, sir.
The statement is in front of you. Can you not explain it? What's the problem? Devapam, are you not listening to me?
Sir, listening.
Then why you can't say? It is in front of you in the screen. You cannot describe it. Okay, fine. Deepshikha, tell.
Yes, sir. Sir, first we'll take the revenues. In the revenues, we'll take operating revenues and then non-operating revenues, then other incomes, then the total income. Then after we'll take the expenses, in which we take the raw materials which are consumed, and then changes in the stock, work in progress, and then the employees.
Changes in stock of finished goods, work in progress, and stock in trade. They depend like that only. Okay. Raw material stock is not taken here. It is adjusted in the raw material consumed. Okay. Go ahead.
Then we'll take the employees' expenses, and then the maintenance expenses.
No, manufacturing expenses.
Yes, sir. Manufacturing expenses. Sir, we'll not take the maintenance expenses here.
Maintenance expense, you see, usually in the format it is written as other expenses. So there you can include everything like insurance expense, printing stationery, maintenance expense, repair maintenance. Repair maintenance can be included here in manufacturing expenses. You are getting me?
Yes, sir. Sir, then we'll calculate the earnings before the interest, tax, and depreciation and amortization.
Okay.
That is by subtracting revenue expenses from the revenues. Then after we'll calculate the depreciation and amortization, and then EBIT, that is earning before interest and tax. Then we'll calculate the interest, and then profit before tax, and then tax, then profit after tax.
Over.
Yes, sir. So
no.
Dividend expenses also you have mentioned.
Dividend expense you reduce, then you get amount transferred to reserve. Where this amount is transferred? Deepsika?
Sir, reserve.
3 semester, reserve transfer, where it is? In which statement?
Sir,
3 months old. Tell. You are 3 semester old in finance. Should not miss it. Who can say?
Sir, in balance sheet.
Balance sheet?
Yes, sir.
Where?
In sir, in profit. Sir, in profits.
In balance sheet, where is the profit? Again, you see, more you say, more mistakes you do. In balance sheet, you don't have figure like profit. Profit is here only. PAT, PBT, EBIT, EBITDA, all those are profit only. In balance sheet, you don't have a term called profit. Where? Who can say?
Sir, under statement of profit and loss.
One at a time. Who is speaking?
Shareholders fund in liability side.
Yes, in shareholder fund, in the liability side, you have got an item called reserve and surplus. You transfer there. So who is this? It is 3. Okay. Could you get it?
Yes, sir.
In shareholder fund, you will. All could get the statement of profit and loss. You will not forget throughout your life because it is required throughout your life. That's why I'm telling you, should not forget it. Okay. Then asset side, non-current liabilities. In somebody told that profit and loss will be coming here. Transfer to reserve, so reserve and surplus. Reserve and surplus. Come on, let me ask another question to somebody. Okay. Gautam Srivastav? Gautami?
Yes, sir.
Tell. I am asking you a question. This transfer to reserve, we are telling that it is being transferred to the reserve and surplus in the equity and liabilities. Now,
Yes.
suppose I get 300 million rupees as my transfer to reserve. So, 1 minute. So what do you suggest in this reserve and surplus 3 step 300 I will write here? Gautami.
So where will I write 300?
From my statement of profit and loss at the end, transfer to reserve figure is 300. I am asking you. So somebody told that this should be. What is happening? 1 minute. Sorry. I can't help it. Okay. So somebody told that this reserves and surplus will be transferred to this place here from the
Yes, sir.
figure. So suppose there I got 300 rupees. Here shall I write 300 rupees?
Yes, sir. Sir, in
Yes.
the credits. Yes, sir.
In equity liabilities, reserve and surplus, shall I write 300 rupees?
Yes, sir.
Yes. Okay. Mahasata? Itisri?
Yes, sir. So the reserve amount will be added in share capital.
True, but I am asking you the same 300 rupees will be coming here. The figure appearing in the balance sheet in reserve and surplus, will it be 300 rupees? 300
So
million
these
rupees.
300 rupees will added with the share capital amount.
Why? Why I should add in capital? Because it is reserve and surplus. Why I should add in capital? Again, you are telling a new angle to it. No, no. 1 minute. Mahasata? Absent. Nirbhik? Nirbhik? He is also absent. Okay, fine. Anybody can say? Nobody? Why you are so silent? Nobody can say whether it's the same amount. Sambita Panigrai?
Sir,
Tell.
sir, in equity part, can we place the profit and return the 300?
That's what I'm asking you. You see, the standard principle is, I think this year somebody told that once you finish up your statement of profit and loss, distribute the dividend to the equity holders. Whatever amount is left out, that we transfer to the reserve and surplus. But I am asking you, suppose that figure is $300 million or 300 million rupees. Now, will I transfer the same amount to here? This figure 300, should it be same as the figure that I am getting here in at the end of the statement of profit and loss? At the end, you see, I got 300 rupees here.
Sir.
Getting
Sir.
my question, Samhita? These 300, will it be same as the 300 there?
Yes, sir.
Yes. Okay.
Sir, my
Anybody?
Mahashweta actually she got disconnected. She was there, she's rejoining, sir. She got disconnected at the time you were asking.
Okay, forget it.
Okay, sir.
You answer my question if you can. So you see, no, it is not. Why I am telling you these fundamental things you must be knowing. Why you are not don't know, I don't know. You see, here you see your balance sheet is called a position statement. Do you know it? Balance sheet is called a position statement. What is the meaning of position statement? That means here when I write balance sheet, I will write balance sheet as on 31st March 2021. Suppose I am writing. What does it mean? It means that suppose the company started in the year 1994. Till that, whatever figures have come, residual figures have come here, all figure will be added up and will be coming here. Are you getting me? But your statement of profit and loss is a flow statement. What does it mean? That means the figure relates to the current year only. That's why the figure, whatever will be appearing here, it is for current year. So 300 will be added with the previous figures, like whatever figures are appearing from beforehand. Suppose I have since 3 years my company has started. I have got 200, 150 and 400. 3 figures I have in my
Previous year result.
previous figure. Then what will be figure appearing here? You tell me. Whom I was asking this question? I was asking to Ambita. Ambita, tell.
Yes, sir. We will add up all the values, then we will write.
Yes. Could you get it now? What I was asking?
Yes, sir. And now.
So This figure will not be 300. It will be 200, 150, 350 plus 400,
1050.
750 plus 300, 1050 will be the figure here. So all items are like that. It is the items which are accumulated over a period of time, not the current year. Current year means profit and loss. Figures up to the point means it is balance sheet. Is it clear?
Yes.
Everybody? Pratyusha Chaudhary, Nirvik Bera, are you present?
Yes, sir. Yes, sir.
Tell Nirvik what I told, explain. Not listening?
Sir, I got disconnected.
I also got disconnected. I
Pratyusha?
just rejoined.
Pratyusha?
Yes, sir.
Tell, explain. No. If you don't listen, I can't help it. Rahul Kumar Patnaik, sorry, Pathak.
Yes, sir.
Tell what I told, explain.
So you have added.
First tell me what was my question. Rahul Kumar.
Yes, sir.
Tell. What was my question? What you should do?
Also,
Not listening. Don't blame the teacher. You don't have get anything. You are not listening to me. Rajeshwari? Rajeshwari absent. Rishabh?
Yes, sir.
Tell, explain. Quickly. Okay, Mahaswata Panda, tell.
Yes, sir. So actually, first is like during my attendance time, so I got disconnected.
Oh,
So
no,
what
tell
you
this
are-
thing. I am asking you a question. Do you want to answer? Tell me.
Yes, yes, sir.
Attendance, this thing, no.
Yes,
So
sir.
you
That
so
if,
you was asking ki reverse surplus can add hoga and then it will directly be will it directly be added or not?
Okay, explain. What is happening?
So the question was the reserve and the surplus that we got from the statement of profit and loss, for example, 300 million, that directly we need to add over here or not? That you asked.
Not add over.
So,
Whether directly it will appear in the balance sheet.
yes, so the
That was
answer
my
is
question.
no.
Answer is
No.
no. Why no?
Yes. Because if we have any other amount, for example, you have given 200, 150 and 400 before we have, so we have to add all this amount also along with this
Before
300
means,
million.
before means. Say I am preparing for 21. This is for 2020.
Sir,
This is for
before means the
2019.
previous years.
Yes, previous
Balance
year.
sheet is not previous statement.
So we'll add with the previous year values.
One at a time. One at a time. Somebody is telling. Tell.
Sir, income statement is for current year, but balance sheet we need to add the previous year amount also.
Okay, because that is a position statement.
Yes.
Till that date, whatever figure you have done, you add up everything. That's the basic difference. So you should understand it. Okay,
Yes.
fine. Who has answered this thing? Sarada, I think.
Yes.
Sarada?
Yes, sir.
Pradhan.
Balyars.
Sarada Pradhan.
Sarada Balyars.
Balyar Singh. Okay. Okay. So you would get it. Now tell me any questions, then we'll proceed further. Any question till now? I explained you what I explained you. Let me summarize in brief. I explained you what for profit is required. Profit is required for sustenance and growth. The company should survive. It should have enough cash to handle its day-to-day affairs, and further, it should be growing in its asset base and in turnover also. For that, profit is required. How do you determine the company is making profit or not? So you can prepare a statement of profit and loss, and for sustenance, you will have to show the balance sheet, because sustenance means what you possess. The company should keep on creating wealth year after year, otherwise it cannot sustain. Growth is also reflected through your balance sheet. Your figures are increasing day by day. So for that purpose, we prepare the statement of profit and loss and balance sheet. Statement of profit and loss and balance sheet should be prepared in Schedule 3, Indian Companies Act 2019. There is a standard basic format for preparing these two statements. First, we start with the statement of profit and loss. You start with operating revenue, non-operating revenue, and other income. All these three together will constitute your total revenue. Total revenue, and I also told the distinction between operating revenue, non-operating revenue, and other income. Operating revenue is directly coming from the product. Non-operating revenue, it relates to the product, but it is not directly coming from the product. Other income doesn't relate to the product. It is from other sources. Example, dividend income, interest income, profit from sale of assets, insurance claims, many things will be coming under other income. So your income side is over. Then we discussed about the expense side. In expense, we talked about the different items that we are covering. So we wrote raw material consumed, employee expenses, manufacturing expenses, and other expenses. This will constitute the operating expenses, which will be covered under your operating expense other than depreciation and amortization, which is covered under your first section of your expense. Once you reduce these expenses from the total revenue, you get EBITDA, earning before interest, tax, depreciation, and amortization. Then reduce depreciation and amortization, you get EBIT, earning before interest and tax. Then from EBIT, you deduct the finance expense, you get PBT, profit before tax. Then you deduct tax, you get PAT, profit after tax. From PAT, you deduct dividend. So dividend, once you deduct, you get amount transferred to reserve and surplus. So that amount which are transferring reserve and surplus is appearing in the equity and liability side of the balance sheet. They are the figures that you are getting. All the figures in the balance sheet will be accumulated figures from the start of the company. That's why balance sheet is called a position statement. That means figures which is added up throughout its life period. Whereas statement of profit and loss is a pro statement. It constitutes the figures for the current year only. Okay. So once we discuss all these two statements plus cash flow, we will not discuss because that doesn't come under our purview. So when we are discussing these three statements, many things can be known from the company. How you have accumulated over a period of time. Sustenance, how it is ensured. Profitability, growth, how it is ensured. Are you growing every day? Have you got enough cash so that you can manage your business? So you can know from these statements. Is it clear?
Yes, sir.
Only one soul who answered
Yes,
yes?
sir.
Yes, sir.
Everybody?
Yes, sir.
Yes, sir.
Yes.
Anybody
Yes,
having
sir.
difficulty, you ask me now, then I'll proceed further. Okay. So our concern from next class onwards, we will be starting our first person. You see, whatever I taught this till now, it is primarily I have done this thing to relate. Anytime I'm teaching you something from working capital management or capital budgeting, wherever I'm teaching, I don't know how much I can teach because my classes are quite few. So whenever I'm teaching all those things, I will always relate to statement of profit and loss and balance sheet. So you should not miss it. That's why I discussed it in the beginning. Okay. So next we'll discuss the two. You see, when we are talking of working capital management, working capital management. When I'm discussing, you have got these terms you see, working capital. What is the meaning of capital? It is a source of fund in your hand. Working means day to day. Working, you see, my somebody is working on daily basis means okay, you can take day to day whatever affairs are, that is working. And capital means source of fund. So you are talking of the day to day source of fund in your hand to manage it, because we discussed now that sustenance is quite important for the organization. If you cannot manage your funds properly or cannot manage your assets properly, your company will be doomed. It will close down. Okay. So we need to discuss this thing, that how you are managing your working capital. So day to day features you are managing
to see that your company is running well. Now tell me, anybody can tell from the balance, not anybody, I will ask somebody. Rishabh Jain is over. Minaki, yes, Minaki?
Yes, sir.
Minaki, tell me, in the balance sheet we discussed that there are non-current liabilities, equity, current liabilities. In the asset side, we have got non-current assets and current assets. Okay. So in non-current liabilities, you may be having the bank loan, you may be having deferred tax liability. I am not explaining these things, just know the terms. Deferred tax liabilities, debentures. Okay. All those things you will be having under non-current liabilities. In current liabilities, you will be having trade payable. Trade payable, you understand how much amount is payable to my supplier. Then bank overdraft. Then you have got
Borrowings.
Short-term borrowings. Then you will be having cash credit. All those things will be coming under current liabilities. Non-current assets, you will be having plant, machinery, land, building, and everything tangible, computer, and you will be having your goodwill, trademark. These are non-tangible. Trademark. Then
Patent, sir, patent.
Patent. So these are intangible. In current asset, you will be having trade receivable, then you will be having your inventory, then short-term securities, cash, bank balance, all those things will come here. Okay, Minaki?
Yes, sir.
From those items you tell me, we have defined now working capital management is something which is day to day and it is a source of fund. Tell me from these items which you can tell that it is a source of fund, and from day to day business only we can trace it out. I wrote those items of balance sheet.
Yes, sir.
Tell which are day to day in nature.
Short-term borrowings.
Okay.
Bank.
Minaki,
Yes, sir.
what is happening? Okay, Sadip Kumar Ponda. Absent. Sambit Kumar Sahu. Sambita Panigrahi.
Yes, sir.
Sambita,
So
tell.
this current asset, are also used as the working capital as the inventory, bank balance, short-term loans, security.
Okay, why? Sambita?
Because so these amounts are used for the day-to-day use. That's why.
Use it for that reason. Why I should say that my current assets are working capital. Santanu Kumar Mishra.
Yes, sir.
Tell.
Sir, they are used in a certain time period, in a short time period, or in a financial year. So
True. But why I should say working capital? You tell me layman's term. I am not very wise. I don't understand finance. In a layman's
Sir,
term, I tell you
pure source
why
of
I should
fund.
why I should say that working capital is relates to whatever items you are saying.
Sir, like cash, it is transacted daily or so.
You are telling the right answer, but I am expecting some more clear answer. You are telling the right thing. Okay, fine, no problem. Simran Kumari,
Yes, sir.
tell.
So, current assets, most of the current assets are working capital as like cash. It are the short-term assets which come and go like on a daily
I
basis.
understand, but tell me in a layman's term. I don't know anything on finance. How do you explain me? Okay, fine. Let me ask somebody. Anybody who can answer this question? They are telling everybody telling the right answer, but I am expecting in layman's term. How do you explain it?
So we can use the current asset immediately for expenses, unlike the other ones.
Okay, true. Okay, I'm explaining. I'm telling. Okay, tell say.
It is readily available, like for working
Okay,
capital.
true. 100% correct. Readily available. How?
Sir, it can be liquidated as if you want. It can be liquidated easily.
Yes, correct. So both these people Abhi can they told. So you see, I'm explaining it. Why I should tell these two items. You see, first let understand that your current liability and current assets, these two are working capital. Then we'll explain why I said the working capital. You see, first we are telling that on day-to-day basis you need fund requirement. That is that explains your working capital. So on day-to-day basis, now you see trade receivable. What does it mean? Customer has taken money, your goods on credit. So will they keep it for a long period of time? You expect them to pay back. Otherwise, how will you manage your business? Your money should come to your hand. So this trade receivable, this is receivable. You get it in a yearly time. Suppose I get 200 rupees here. I am supposed to get in current month. Okay. Inventory, again, same thing. Stock, let's say 1 lakh rupees stock is lying in the go down. You can say in this current month, you can recover 1,500 rupees. Okay. Are you getting me? Immediately you can recover the money. Short-term securities, you can sell off the security and get 300 rupees from the securities. Cash, you have got some 100 rupees cash in your hand. And bank balance, say you have got some 200 million rupees. So all those things are suppose in crores and millions. Tell me immediately how much fund you can get? In current year, how much fund you can get? You get 200 from your receivable, you get 1,500 from your inventory, you get 300 from your short-term securities, 100 rupees from cash can bank balance, 200 rupees from your cash balance and 200 rupees from your bank balance. So what is the amount of money available in your hand immediately? Which can be available, not available, but which can be.
2100.
How much? So you will add up all those things?
Yes,
1700,
2300.
1800, 2100, 2300. True or not?
Yes, sir.
Now you see, this is available in your hand, that's fine. But can you tell all those are mine? You cannot say. Why? Because you have to pay off something. Once you pay off, then only you can tell, okay, I pay off this thing and rest is left out in my hand is my own. Suppose trade payable, you will have to pay to your suppliers. Suppose trade payable is 250. Bank overdraft, immediately bank will tell, okay, you have taken a loan, close this draft now. I will not allow you any permit further. I will not allow any balance or limit further. So what will do? You will have to pay it up, say 150 is your bank overdraft payment. Certain borrowings, again you have borrowed from your friends, relative, somebody, you have got some 100 rupees. Cash credit, say it is another 100. I have forgotten another item, provisions. Provisions means immediately tax, dividend, all those things you will have to pay. Say this is, say 50 rupees. Tell me how much you will have to pay immediately?
650.
250 plus 150. 400 plus 100. 500 plus 100. 600. 650. Immediately we'll have to pay off. So tell me, how much resources you can tell in your hand only?
2300 minus 650.
2300 minus 650. So it is
1650.
So can you tell it is my working capital? Well, this is available on daily basis, on regular basis. But if other items you cannot get, plant you cannot sell immediately. Okay, goodwill doesn't have a value at all. Machinery you cannot sell, building you cannot sell. If you sell it up, how your business will be managed? But these things are meant to be sold. These things are meant to be liquidated. Are you getting me? Equity capital you should not refund to your shareholders, not required. Because they have given the money forever, your company will enjoy this benefit forever. Are you getting?
Yes.
Is it clear? So something are meant to be liquidated, something are not meant to be liquidated. So things which are meant to be liquidated are short term in nature, and you can always get funds out of it. Could you get what is working capital?
Yes, sir.
Yes, sir.
Yes, sir.
Let me ask somebody. Simran Kumari. Oh, see, I talked with her. Shraddha, what you are saying?
Yes, sir.
Explain.
Yes, sir. So the working capital, here we can include the current asset as well as current liability.
Because all these can be liquidated easily. And if we have 2300 amount of current asset, we can't have total working capital as 2300 because we have to subtract this current liability. So here we have 650 current liability. So our working capital will be 2300 minus 650, that is 1650.
What does it indicate? This amount of money, 1650 in your hand, what does it indicate?
So we can use it in day-to-day.
Okay, you can use it for day-to-day management.
Day-to-day activities.
So, okay, fine. Good. Good, Shraddha. Shivam?
Yes, sir.
Can you explain it a little bit better than Shraddha? Shivam, either you explain or you tell a no.
No, sir.
Huh?
No, sir.
No. Okay. Shreya Sarkar,
Yes, sir.
tell.
Yes, sir. As working capital, we can consider current assets and current liability. The things which are under current asset and current liability, as in for current asset, we have inventory, the trade receivables that are readily available to us. Like within a period of time, within a year, we will get that back. So that is the cash we have, the amount we will be having, the current asset, with which we will be subtracting the current liability, which we are liable to pay back to the company. So when we subtract both the things, we can get the operating the capital, which will help, which will be the working capital for the company that is readily available to us.
Fine. So remember, two terms we use here. The amount we are receiving from current asset is a gross working capital. But the amount we are getting after deducting the current liabilities, it is net working capital. So let me put it this way. First of all, working capital, these two terms separately taken can be explained like this. Working means day to day. Capital means source of fund. So money that is in my hand on a day to day basis is the working capital. So working capital primarily will relate to your balance sheet, the items that is shown in the balance sheet. It will primarily relate to those items. Okay. So here you see the basic principle is things which can be liquidated immediately and also which are meant to be liquidated immediately. It is not that something which is for a long-term basis I will liquidate and I will tell I have working capital in my hand. No, that is not correct. So you will have to look into things which are can be liquidated and meant to be liquidated. So what are those items? So something which can be liquidated in 1 year is trade receivable, inventory, short-term securities, cash and bank balance. So all those items together is called a gross working capital or the current assets, which will be paid off immediately. So it will be trade payable, bank overdraft, short-term borrowings, cash credit, income tax provision, dividend provision, or outstanding expenses. Together, all those things immediately should be paid off. So the net figure that is available in my hand is current assets minus current liabilities. That is the net working capital. Did you get the concept of working capital? Only one girl understood?
Yes, sir.
Yes,
Yes,
sir.
sir. Yes, sir.
Okay.
Yes, sir.
Okay, fine. So next class, what we will do, we will do the estimation of working capital. So this is the fundamentals we have studied. The next class onwards, we will be again proceeding further and discussing the criticality of working capital management. Fine.
Okay,
Let me take the attendance. Shreya Sarkar,
Yes, sir.
Shreya Shruti, Sneha Singh,
Present, sir.
Soham Sen,
Present, sir.
Samajit Maiti,
Present, sir.
Subhajit, Shubham, Sunit,
Present, sir.
Tini,
Present, sir.
Yas,
Present.
Aditya, Abhinav, Kumar Aditya, Shivani,
Present, sir.
Piyush,
Present, sir.
Itisri Parida,
Present, sir.
Itisri,
Yes, sir.
Divyajyoti,
Present, sir.
Siddhant, Shashwat,
Present.
Sonali,
Present, sir.
Naman, okay. So next class onwards, I'll send you a Google Meet invitation, and only thing is that your recording will not be available.
Excuse me, sir.
Yes, tell.
So I joined late, so I might have missed my attendance.
So you forget it. Aditya, I will not call the rolls again. Attendance is not a big issue. It's fine. Next class onwards, join yearly. Could you get it, Aditya?
Yes. Yes.
Don't worry for attendance. Not a very critical thing. Okay. So is it fine? I'll send a Google Meet invitation next time, and your recording will be not available.
No, sir.
But
It
I
will be
cannot
better
entertain
in
you.
Zoom.
You listen to me. In Zoom, I cannot entertain you throughout, admitting people and leaving. You are telling that you allow, don't keep this admitting option. But if I don't put, many other useless persons will enter into the.
Sir, we will
and they will
inform
disturb me.
everyone to join in time.
Sir, you can make our seers as the host.
Yes, sir.
Whom?
So you
Who
can
will be?
shift the host
The CR.
to the
Okay,
CR.
but remember one thing. Here, anybody making mischief in the class is your responsibility. Then I will transfer your. Will make you the host. Okay. Anybody disturbing in the class will be your responsibility. I will make you the host. Done. Fine. Okay.
Thank you,
sir.
Thank you, sir.
Okay. Welcome.
Thank you, sir. Thank you, sir.
Welcome.
Thank you, sir.
Thank you, sir.
Most welcome.
Yes, sir.